In the world of finances and financial planning, two terms often find themselves at the forefront. Can you guess what two terms I'm referring to? Well, I am referring to budgeting and forecasting. Now, these terms are sometimes used interchangeably. However, they serve two distinct purposes when it comes to the financial management aspects of your business. And in this episode, we will explore the differences between budgeting and forecasting and highlight their unique purposes and the value they bring to your business. Stay tuned.
Welcome to the Say Yes to Profit Show. I am Octavia Conner, a CFO who helps service-based entrepreneurs implement the financial systems, strategies, and solutions to increase cash flow, reduce taxes, generate wealth, and say yes to profits. Say Yes to Profits is a full-service accounting firm based in Atlanta, Georgia, but we service clients nationwide. Again, welcome to the Say Yes to Profits Show.
Hello, Profit Squad. Welcome back to another episode. I have a question for you. Did you know that your entrepreneur journey demands a sharp understanding of your business's financial health at all times? Here's the thing. Every decision you make shapes your future financial position. Okay. And one of the main goals of your future financial position should be to be profitable and consistently have a positive cash flow. Would you agree? Yes. I hear you saying yes. Well, here's what you have to understand. As an entrepreneur, you must navigate the breakable balance between maintaining financial control and proactively operating your growing business. Now, this is critical if you want to not just survive, but thrive in the ever-evolving world of business ownership. And let's be honest here. Who wants to survive? Don't nobody want to do that, right? So you need to get a clear understanding of both budgeting and forecasting. Well, we will explore the nuisance of budgeting and forecasting and how to use these financial tools to chart a course towards sustainable financial success. So without further ado, let's start with a budget. Now, first and foremost, a budget is a blueprint for financial control. Do you currently have financial control in your business? Well, if you don't, this is your clue that you need a budget. As a matter of fact, a budget is basically a financial plan that outlines your business's expected income and expenses over a specific period of time. And so I'm going to share a budget with you on this screen, right? And I'm going to do a high-level overview of this budget. Click the link in the description to see a detailed video of how to create a budget using your historical data. For this high-level overview, you want to make sure that you list all of the months that you will be covering in your budget in the columns. Then you're going to list the yearly amount as well, okay? And next, you're going to list all of your revenue. So your revenue could be your services and your products, your courses, or anything else that you offer in your business. Once you list that information, next, you're going to list your cost of goods and services sold, as you see here. And for your expenses, you can either list them by departments, you can list them by categories, whatever works for you and your business. On this example, I have listed all of the expenses by different categories, as you see here, right? Once you tally all of this up, at the bottom, you're going to then subtract your total from your revenue. And that's going to tell you if you have a net profit or a net loss for your business, okay? And so that is how you create a budget for your company. Again, here's what I need you to understand. The budget serves as a blueprint, providing a detailed roadmap for allocating resources and managing finances. They are generally prepared annually and are intended to guide financial decisions by setting limits on spending in various categories. All right. So now that we went over and kind of reviewed a budget, I want to deep dive into the characteristics of a budget. So as you see here on the screen, the very first thing we have to start with is the purpose of a budget. Now, a budget focuses on financial control, as I said before. It also helps you with resource allocations and adhering to predetermined targets. The next characteristic of a budget is all about fixed figures. Budgets are based on fixed figures and are formulated based on historical data and projected growth. The next characteristic is all about benchmark for performances, right? So budgets act as benchmarks against what actually happened. So it's going to measure your current performance against what you thought would happen. And this is going to give you a variance. And so you're going to have your budget versus your actual and your variance. And you want to analyze that to make sure that you're using your finances effectively, okay? The next characteristic is about control and compliance. And you've heard me say control throughout this episode a couple of times. Budgets are instrumental in maintaining financial discipline. Do you need financial discipline? They're going to ensure that the actual spending aligns with planned figures. And the final characteristic is about resource allocations. So budgets help you allocate resources such as capital, labor, and other assets to different departments and or projects. Now, it's going to help your business prioritize spending and ensure that the way you're spending is strategically aligned with your priorities, all right? So now that we have discussed a budget in details or budgeting, let's discuss forecasting. First thing you need to know is that a forecast is a dynamic vision of future trends. Keep that in mind. A forecast is a best guess estimate of future financial outcomes based on current patterns, historical data, trends, your industry, your market condition, your business history, and so much more. Now, unlike a budget, a forecast is not set in stone and can be adjusted regularly to reflect changes in your business circumstances. So just like we went over a budget, I want you to look at my screen because we're going to go over a forecast now. So with a forecast, again, I'm going to do a high-level overview of this. Click the link in the description to see the details of how you can create a forecast, okay? The very first thing you need to do is, as of the start of your forecast, you want to put your starting balance, which is what you see here on the screen. You also want to put the dates. Then you're going to go and you're going to list all of your cash in for your company, okay? So every way cash is going to come into your business. More about that later. Then you're going to list all of the ways cash is going to go out of your business. Next, you're going to total that up and you're going to receive an ending cash balance. And that balance is going to carry over to the next week or the next month of your forecast. All right. And so those are the figures that you need to have to be clear on your forecast. You got it? Got it? All right. So here's the thing. I want you to keep something very, very important in mind. A forecast is forward-looking, all right? And a forecast provides insight into potential future scenarios. A forecast is generally prepared quarterly, monthly, or even weekly, depending on your current financial position. And so if you're in this feast or famine mode and cash is few and far between and you don't know if you're going to make it the next week, the next month, heck, the next day in your business, you need a forecast. Because a forecast will enable you to become proactive at being a business owner, and it's going to help you adapt to evolving possibilities. Now, with all of that said, let's go over the key characteristics of a forecast. The first characteristic, of course, is the purpose, right? Just like with the budget. Now, forecast provides, again, a forward-looking perspective, aiding in strategic planning and proactive decision-making. The next characteristic is all about flexible figures. Now, remember with the budget, the figures, they were not flexible at all. Well, with a forecast, the figures allow you to adapt and revise your financials regularly and incorporate new information and changing circumstances. So that is a key characteristic. The next characteristic is all about scenario analysis. Now, forecasting allows for scenario analysis. Forecasting enables your business to explore various potential outcomes and plan for uncertainty. Now, this flexibility is valuable in volatile markets and when cash flow is few and far between. The next good characteristic of forecasting is decision making. Now, while budgets guide resource allocation, they guide it. Forecasting gives decision makers insight into potential challenges and opportunities. Again, this forward-looking perspective aids in strategic decision making. The final characteristic is all about qualitative and quantitative elements. Have you thought about those? While quantitative data is crucial, forecasts may incorporate qualitative insights and external factors that influence financial outcomes. All right. And so those are the characteristics of a forecast. Now, for a final analysis, I want to compare budgeting versus forecasting so that you're crystal clear. And we're going to deep dive into 3 of the major differences between the two. The first thing we have to think about are the numbers. A budget mainly plans for revenue, cost of goods, expenses, and net income. A forecast projects all forms of cash, such as cash in, which could include revenue, grants, loans, owners, partners, shareholders, contributions, and any additional ways money will enter your business. All right. A forecast also discusses or outline your cash out. Same thing you see on here, such as cost of goods and services sold, expenses, credit card payments, loan payments, owners, partners, shareholders, distributions, and any additional ways money will leave your business. Okay. The next major difference is all about the periods. Budgets are prepared annually and they are often broken down monthly. Forecast is best prepared either quarterly, monthly, or weekly. Remember, if you're having cash problems, you need a weekly forecast. Okay. This is your clue again. The final major difference is all about positions. All right. A budget helps you plan. A forecast helps you proactively see into the future. It's going to help you proactively see what's actually going to happen. Okay. Listen, Profit Squad. I know we went over a lot, but I wanted to make sure you were crystal clear. Okay. And here's what you have to understand. Both a budget and a forecast are necessary for effective financial management, but they serve different purposes. Together, these financial tools empower you, yes, you, to not only manage your present finances, but also strategically plan for the challenges and opportunities that lies ahead. All right. Now, I have a CEO profit question for you. Okay. So, how can the integration of both budgeting and forecasting empower your business to navigate uncertainties and achieve strategic objectives in today's dynamic marketplace? I really want to hear your answer to this question below. So leave your answers and comments below. All right. Don't forget to like and subscribe to this episode. If you got any value out of this episode, if it was good in any way, like, subscribe, and share it right now. All right. All right. And until next time, say yes to profits.
Thank you for watching the Say Yes to Profit show. Make sure you download the resources given in this episode and follow me on Instagram at Octavia Conner CFO. And always remember, say yes to profits.